welcome to my class, and in this we are going to talk about balances and the balance of payments. So for this I'm going to show you the components, and from there we can work out the balances. There we will see. So in this we have already seen that it looks like components, the structures look somewhat like this, that you have what is known as a credit side and you have the debit side. So any international transaction which leads to inflow of foreign exchange is recorded on the credit side. So we have, and the debit side, any international transaction which results in outflow of foreign exchange is recorded on the debit side. So on the current side, balance of payment, we have what is known as say trade in goods. So it includes exports of goods and imports of goods. Then, for example, export or import of machinery. Then trade in services. Services trade include both net factor income and net non-factor income transactions. So net factor income it includes net international earnings or factors of production like land, labor, capital. For example, if we take the net income from compensation of employees. And then we also have net investment income. For example, interest, profits and dividends on assets abroad minus the income foreigners earn on assets they own in India. Non-factor income, net non-factor income is in net sale of service products like shipping, banking, tourism, software services. And you also have transfer payments, and foreign transfers are the receipts which the resident of a country get for free without having to provide any goods or services in return. So they consist of gifts, remittances and grants. So this could be given by government or by any private citizens living abroad. So now, we're going to talk about, let's just hurriedly do what is capital account. So on the capital account, we have what is known as capital inflows and capital outflows. Let's take capital inflows such as receipts of loans from abroad, sale of assets or shares in foreign companies are recorded on the credit side of the capital account because they are inflow of foreign exchange in India. And capital outflows such as repayment of loans, purchases of assets or shares of foreign countries are recorded on the debit side of the capital account as it results in outflow of foreign exchange. Okay, so after that, so just have a look. We're going to do balances because it's balance of payments. Let's just find out what are these balances. So that's quite interesting. So what is a balance? What does balance mean, first of all? It means the difference between the sum of credits and the sum of debits, that is net credit. So we're going to talk about net. Like for example, if we look at this, and this is the net side. So balance means the difference. So we're going to do balance means the difference between the sum of credits and sum of debits. Okay. So the balance of payment account records three balances, that is balance of trade, balance on current account and balance on capital account. So let's take the first one, balance of trade. It is defined as equal to export of goods less import of goods. So balance of trade is export of goods minus import of goods. So balance of trade can be both positive or negative. Positive balance means that exports of goods is greater than the imports of goods. It means that the country has trade surplus. And negative balance means that the exports of goods is less than the imports of goods. It means that the country has trade deficit. Now we have what is known as balance on current account. It is defined as equal to the difference between the sum of credits and the sum of debits on current account. Balance on current account is equal to sum of credits on current account minus sum of debits on current account. It can be negative and positive both. When the sum of credits is greater than the sum of debits, it is positive. When the sum of credits is less than the sum of debits, it's negative. So here in this you can see this is the current account here. So then we have what is known as balance on the capital account. So just look at this. What is capital account? It is defined as the difference between the sum of credits and the sum of debits on the capital account. So balance on capital account is sum of credits on the capital account minus sum of debits on the capital account. It can be positive and negative both. If the sum of credits is greater than the sum of debits, it's positive. When the sum of credits is less than the sum of debits, it is negative. So this is what we are going to do, and basically we're going to do in the next class. I'm going to tell you that what is deficit generally. So, and also balance of payment always balances. That's what we're going to do.